Let's take a look at some information and charts on 1inch for Brave New Coin. So 1inch is fairly straightforward. It's a DEX aggregator that sort of sits on top of the entire DEX ecosystem and trades through the various DEXs, including Sushi, Uni, Paraswap, Balancer. It does all that stuff. It is multi-chain. They claim they have the most liquidity and lowest slippage. Paraswap, another aggregator, Matcha, ZRX API, another type of aggregator. So the aggregators are in a mini battle at the moment for liquidity. The token itself is used for mainly liquidity mining, some referral stuff, some DAO stuff, some governance stuff. If we look at the farming liquidity mining, most of these AMM pairs are with 1inch with the various APYs. You're still exposing yourself to volatility of 1inch, obviously, but it's a way for 1inch to keep people into the ecosystem and incentivize holding 1inch, which ultimately is the goal, in my opinion, or should be the goal really for most of these projects. If you want people to use your token, you need to have a use case, whether it's invented or not. I mean, BNB is a great example of this. BNB made this walled garden where you get discounts for holding BNB, so it only made sense, right? Plus there was a buy and burn mechanic for BNB, another exchange token, just to compare. So they have all these farming and liquidity initiatives with various APYs. They also have just generic pools as well that you can participate in with various APYs, again exposing yourself to price volatility, to impermanent loss. That sort of comes with a given if you are participating in this AMM stuff. If we look at some of the stats, it's a bit odd because the liquidity, the users, the earnings, everything was booming January to end of February, basically. And since February, things have just been flat across the board on any metric you can really look at. Price as well is basically flat. It's rising, slowly grinding up over time, but it isn't outperforming ETH or outperforming some of this other DeFi stuff. So I think they're kind of between a rock and a hard place because they're going to need to increase incentives or use cases for 1inch. And that does include going multi-chain. I think that's a smart move by any aggregator. That just makes sense. But the liquidity mining stuff, they're probably going to extend this, I'd imagine. So how this works is they have start dates and end dates. They've already extended this specific pair once. And again, they have these in various forms, 1inch WBTC, 1inch USDC, and a bunch of other stuff I've never heard of, Opium, ECHI, VSP, SWISE, WXT. So my guess is they'll have to increase these incentives or reintroduce them to sort of keep people in the casino, if you will. If we look at the 1inch TVL, again, it just has kind of fallen off a cliff and stayed there since beginning of March. So it's hard to know what to think on 1inch versus ZRX versus all this other stuff. I mean, ZRX price-wise hasn't done too well since February either. So either you are fundamentally bullish DeFi and believe DeFi's here to stay and believe there will be another rotation from ETH into DeFi, from all these like scam coins into DeFi. Or you're just saying, all right, it was a flash in the pan, it's kind of one and done, I'm going to sit this out and wait until things look better again. Especially with ETH fees back up to where they are. Not only are the ETH scams sucking liquidity out of the room, but they're also destroying the DeFi stuff because fees are extremely high again. So nothing you want to see if you are bullish DeFi anything right now. Here's another way to look at the TVL. According to the bank, it's around 560 million. DeFi Pulse has it around 350. In any case, it's down from where it was. Certainly, trading volumes are slightly up over the past few days. Transactions down, users down. So not anything you want to see if you're bullish on 1inch. And I guess you have to ask, if you're 1inch, you have to ask yourself, how are we not capturing users versus ZRX versus Matcha? The same thing with ZRX. How can a DEX aggregator stand out versus just the garden variety Uniswap v2, for example? If we look at all of the ETH DEXs, volumes just continue to mega moon right over time, which is what you want to see. This gives me some definite bullish vibes and bullish continuation expectations for these tokens, even though I think in a bear market, all of these are going to go 50% or less to the downside, 50% or more to the downside, because that governance piece, no one's going to care. And if trading volumes are down, then all of these token prices are going to go down. So 1inch still has extremely high trading volumes. If we look number 3 there, relative to everything else. So it's hard to be super bearish on it in the group, within the group, certainly. There it is there, number 3, number 3. Also interesting that Uniswap V3 still doesn't look to be experiencing the uptake that maybe Uniswap was hoping for relative to V2. But any of that like intra-governance squabbling on Uni as far as the users are concerned, they're just going to do something else or stay on V2 or go to Sushi or just use a wrapper, or not a wrapper, but a DEX aggregator. You know, they're going to push people away from Uniswap and just go somewhere else. Paraswap, again, like I mentioned, another aggregator. They're slowly creeping up this list as well. If you look at the 1inch transaction counts, this was the initial distribution of the token from Mooniswap at the time. And transaction counts are soft. I mean, you can't deny that. Since February, flat, not really too exciting, even on daily versus weekly. Nothing really super bullish here. You know, it's just sideways. And average transaction values are significantly up, probably because of price. As price hits all-time highs or has hit all-time highs over the past week or two, you're going to see a bunch of people start moving 1inch to sell. That's just how it works. Typically, when you see price discovery like that on an airdrop, essentially, right? For a lot of people, this airdrop is worth a significant amount of money at this point if they held it from December. If you look at NVT, inverse metric of economic utility, falling NVT is bullish. It says that on-chain activity is increasing relative to market cap. So we're still seeing a significant amount of on-chain activity relative to market cap here. NVT sitting at or near really multi-month lows. So that is a bullish outlook on NVT. Active addresses, though, again, much like transaction counts, just, you know, nothing too exciting going on here. If we look at 1inch, Google Trends, which I don't think I've done before, but this could be a variety of things. I think since January, though, it's pretty easy to say that this is probably driven by the exchange and not necessarily anything else. If we look at the past 90 days, mostly just sideways since those January, February euphoric DeFi times. So if DeFi starts to pick up again collectively as a group, if ETH fees can stay down, which they had been doing great, they raised the ETH gas ceiling. ETH fees were down significantly, but in the past couple days, ETH fees again up big time. And that's going to hurt all of DeFi. Here's the 1inch USDT pair, Binance 4-hour. And since February, price realistically hasn't done much of anything. Now it has hit all-time highs. I don't want to discount that, but it's been massive chop zone. It's been in and out of this 200-day moving average on the 4-hour. It has established decent VPVR support at this point. So I'm not personally going to get too worried about it until it's sub 3.7, because that's where the bottom of this VPVR support ends. Anything below that, and it will probably get significantly bearish extremely quickly. If it does break that level, it's probably because all of DeFi is tailing off. You know, that's probably the end of DeFi season. Once a pair like this, which exploded in January, went sideways since February, breaks that range, it's definitely a canary in the coal mine for everything going on. So as long as we're above 3.7, I think we're okay. If you're holding this pair like I am, mainly from the airdrop or farming it on 1inch, then you'll know that the volatility is extremely high intraday. And what's not shown on here is the wicks, because this is just closes on the 4-hour. But even still, you can see how violently volatile this is. So keep that in mind. This would be extremely difficult to trade for that reason, especially on leverage. You're just going to get wiped out instantly. But again, if you're okay with DEXs and DEX aggregators, I think it's a good buy and hold, along with most of this other stuff in DeFi right now. 6-hour cloud hasn't really helped you out too much since February, because it's just been chop. It hasn't really been below the cloud long enough to call bearish, hasn't really been above the cloud enough to call bullish. Even still, right now, it is above the cloud, bouncing on the Kijun so far. So it's getting more and more shades of bullishness up here. It certainly doesn't look like a short by any means, but since February it just hasn't really done much of anything. 1-inch BTC looks more bullish in that since April it's actually outperformed BTC pretty well, holding above the 6-hour 200-day moving average, holding above this VPVR resistance, and above the Kijun on the cloud. So this looks fine to me for bullish continuation. It even had this inverted head and shoulders characteristic to it leading into a couple days ago. So it's certainly easier to call this bullish than to look at this flat range and call it anything but neutral. And then looking at the 1-inch ETH pair, I'll say this for any ETH pair for the most part, when you're pushing not all-time lows, when you're pushing multi-month lows, you're going to start to see people rotating into stuff like this. People will eat the downside of this potentially for the reward, the expectation that this will eventually mean revert or start to outperform ETH at some point in time. Eventually, ideally, we will see some sort of rotation out of ETH into anything else, including DeFi. Right now, there's an argument to be made that people are just buying ETH to send it to scams, right? All these Doge clones. So it's going to be hard to outperform ETH in that scenario when everybody just wants, it's the ICO situation all over again, right? There's extremely high ETH demand to pump these random scam coins. Based on technicals though, we are seeing a multi-month, I guess multi-week, bullish divergence with a series of lower lows in higher RSI. So there's weakening bearish momentum, and virtually every ETH chart looks like this, where it's just a massive sell-off that's pretty significantly far below its mean reversion target. So overall, 1-inch probably not going anywhere, but they will run into some trouble if they can't keep the incentives high to keep the liquidity on the platform. They can do this with governance, but mainly they're going to do this with liquidity incentives, mining incentives, that sort of thing. Every metric I can look at, on-chain metrics, TVL, has really come off since February and is certainly divergent from price. Price, like I said, has hit all-time highs kind of successively, very quietly since April. All-time high a couple times in April, now all-time high a couple times in May. And that could be more of a general DeFi effect than a 1-inch independent effect. And lastly, I'll just mention the BTC and ETH fund that I trade for Techemy Capital on Enzyme.finance. How this works is you can deposit ETH or USDC into a smart contract. Then I have the ability to use that USDC to trade ETH or BTC in this case, as well as send it to some yield interest bearing stuff like Aave, or I can trade synthetics inverse ETH and BTC to trade or to short ETH or BTC when the time comes. So you can see performance, allocations, trades, where I make those trades all through DEXs. You can see deposits, withdrawals. You can see sort of what I'm doing and when. All of this is based on TA and FA, fundamental analysis on-chain stuff, and is generally more straightforward as far as price action is concerned versus our DeFi offering, the DeFi portfolio, which we started in early April. Highly volatile. All of DeFi is going to be highly volatile. The highs are going to be higher than everything else. The lows are going to be lower than everything else. So you can certainly expect that. It's not for the weak of heart, but very similar situation. You can see everything I'm trading here. It's 15 to 20 DeFi related coins, DEX aggregators, lending and borrowing, oracles, and then miscellaneous stuff like wrappers, Ren, for example. So you can see all the allocations here, all the trades I make, and when and for how much. So that's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.